Now, amid all the speculation over Tony Hayward's future, the BP CEO met with Russian officials today to reassure them he won't be forced to dump Russian assets to pay for cleanup costs and claims in the Gulf of Mexico. But that doesn't mean BP won't have to sell something to raise cash. Colin Fenton of Curium Capital Management has gamed out some of the scenarios for BP, and he's with us now from our Boston bureau. Colin was an original member of Goldman Sachs' commodities research team. Colin, always good to have you. You don't think BP is going to be forced to sell these Russian assets. In fact, you've assigned a probability to it all. But I want you to walk us through it all because it is contingent on a number of factors. So briefly explain to us your calculus.
Okay, so basically it comes down to when the relief wells will successfully cap the damaged well. And essentially that is a 3-month process. The first relief well was drilled on May 2nd. The second one's on May 16th. It gives you a mid-August deadline for completion of the well. Now, it appears that BP is a little bit ahead of schedule by about 2 weeks, but we think that there's still a 45% probability that this will go into September due to hurricane activity and tropical storm activity. Now, if that happens, the probability will go up, but the numbers we're assigning are 45% probability that it's a late capping of the well. If that happens, a 2% risk of a divestiture of BP assets jumps to 10%. And importantly, if there's a severe hurricane, we think that probability can go to 25%.
Okay, so at a 25%, you're talking about the likelihood that BP would have to sell some Russian assets. Let's talk about what other assets, or at least would have to sell. You'll have to tell me Russian assets or something else. What is BP most likely to get rid of?
They're most likely to look at their North American assets or their assets off of Angola. These are probably easier to dispose because more buyers realistically could acquire them. The problem with Russia is that it's 1 million barrels per day, which, to put that in context, is a quarter of BP's footprint in the world, and BP is essentially the largest energy producer in the world. So there aren't too many people, too many companies that could acquire the Russian assets. So we think if something's going to happen, it's probably going to be onshore North America or off the coast of Africa, which are very desirable assets for the Chinese in particular.
Is there a political risk at all for BP in selling those North American assets, something in Alaska perhaps, creating the impression that it's pulling out and may not fulfill all of its obligations to people in the Gulf?
You know, it's tough to say. You could come up with a number of scenarios. Personally, I think that if that were to happen, it would be kind of the best case scenario for everybody. I don't think there would be much political pushback if they sold those assets in North America. It's important to keep in mind that the amount of production that's in the Gulf of Mexico for BP is about half of the Russian production that BP has. So, you know, there are only so many angles to go here. But we think the most likely outcome is that they could cap the well within the next 2 to 3 weeks. But the main problem is that if there is a hurricane, it'll take at least 5 days to take the drill ships off of the site and then 3 days to put them back. Admiral Allen is saying it could take as long as 2 weeks. So even a single storm, and it probably won't be this one, but if there's another storm in July or August, we'll push back that schedule.
Certainly a risk, Colin, that you can't downplay. I want to get to the oil price, though, before we leave you, Colin. $78 a barrel. Where do you think it's going? Because the last time we talked to you, things were quite a bit quieter, and it looked as if it was headed down to 65. In fact, I think it got there before bouncing up to where it is now.
Correct. We thought it could get to 65. It did so on May 20th for a single day, which gives you a sense of volatility and risk in the oil market. Then the 6-month moratorium was imposed by the Obama administration. It's subsequently been nullified by a federal court. In the near term, essentially, commodities are all about supply-side risk, and if the moratorium is reimposed, we could see a $90 price. But the demand side is quite weak, and if that moratorium remains not in effect, we think we could scale back to $65 to $70.
Okay, but that's an important point that you make. Supply and demand are now in control of the oil price, not investors' appetite for so-called risky assets.
Absolutely. This is all completely driven by fundamentals, and essentially all you're seeing now at the $78, $79 oil price is a little bit of a risk premium because of this tropical storm Alex, which is probably going to bypass the producing assets in the Gulf of Mexico. So we think that could come out today, possibly.
All right.
But,
Colin, you know what? I don't mean to cut you off, but we have to go. Colin, thanks so much. Great insights on the oil price. Also, BP's future. Colin Fenton of Curium Capital.